Hi everyone, Basil Chapman sitting in for Tom O'Brien. It's my pleasure to be sitting here in my engineer says growl. That's the best growl I'm going to give. It's my pleasure to be here. My honor to be sitting in Tom O'Brien's seat. Well, not directly down in Florida. I'm talking from Newton, Massachusetts. And I know that this goes all around the world. I get emails from people all over the show. So kudos to Tom O'Brien for really building a magnificent site here at TFNN. If you have a chance, and if you go to the site and you just click on the three icons and you just click on one, it'll pick up exactly what instrument you're using to be able to stream live. You'll be able to see the show exactly as I'm showing it here, as people in the den can see it. And it's just what I'm looking at is on the left side, you've got the daily chart. This is the methodology I use. In the middle, you've got the weekly chart, and on the right, you've got the monthly chart. So let me do this in a very simple way. The technique that I use under the umbrella of the Chapman wave methodology identifies the lowest low bar. Sometimes you can get moving averages that concur. In this particular instance, I'm looking at the Dow, and right there at that trough on the 9th of October at 14,719, what does the Dow do? It touches the exact 200-period exponential moving average, and it uses it as a springboard. My technique says if you start identifying each successively higher peak and you give them capital uppercase letters, you can go to an A, a B, a C, and then a D. And a D, that's normally where you've got to be a little bit careful, and you can find that there's what I call a recycle, or that's where it pulls back. But that's the moment of truth in the buy signal that goes to a buy mode in the Chapman wave methodology. Look at this. There's this doji low candle, a particular candle that has a very narrow close and open with a little bit of a wick on either side, right on the 9th of October. It runs up and it goes to peak A, right there on the 14th of October at 15,309. Then it goes to another peak B at 15,412 on the 18th of October. Then it goes to C on the 22nd of October at 15,518. And what did we do 3 days ago? The Dow went to an exact left side, right side price move. This is human nature. You know, on the way down, you keep thinking, oh, this is terrible. How bad? The news headlines are very big. On the way up, you don't see those headlines the same way, except we've gone all the way down from 15,709 in the Dow on the 18th of September down to that October the 9th low. 15 sessions, and in 15 sessions to the day, almost to the hour, you break above 15,709. There's a technique I call the plumb line, how you can identify that midpoint to be able to take you to that particular point. And we went to, this is another thing I always look for. I look for round numbers. Now, it's purely coincidence when an index that's trading in the 15,000 something has no decimals. It goes to 15,721.00, a round number high at peak D. That's always a little tip off to me to say, hey, be careful, because if you break above that, that's bullish. If you hold below it for a certain number of bars, that can see a pullback coming. So let me run the numbers, and then we're going to go through this in a very methodical way, because I know that I've had a lot of people calling me and saying, hey, what about the weekly, but what about the monthly? If we are holding long-term positions, should we continue to hold it? What is the risk to the downside? Do I expect higher prices in the future? The answer is yes, yes, yes. So let's go through. We've got the Dow up 69 to 50,615, just 120 or something points off the all-time high. You've got the comp index up 2 at 3922. Didn't act as well as the Dow. The S&P was up 7 at 1763. A very reluctant participant today. It managed to garner quite a bit of the 500 stocks garnered some upside momentum the last hour, because they were really they were flailing. The S&P didn't know what to do, and then suddenly the buying came in. Of course, it's also the end of the month, end of the week. What we've got is gold down $26 at 9,007. Oh, whoops, that was the wrong one. That was the DAX. Gold was down 8 to someone. They said, what? Gold, this is the December contract, was down 8.5 at 13.15. Silver was down 2 cents at 21.86. Platinum was up 40 at 14.53, up 4. High-grade copper just stuck in the trading range between 334 and 330, maybe 328. Today it was down 15 cents. You've got bonds down over a point. I'll talk about it in a short while. At 133 and 21 30-seconds, the dollar was screaming to the upside right at resistance. We'll talk about how you can draw a single trend line, and that represents resistance. Euro was down a little. And what I want you to do is to mention that our number here is 877-927-6648. Now, just a little bit about myself. I've been here with TFNN for over 10 years, 10 and a half years. My service is the opening call, a very comprehensive daily newsletter. Right at this particular moment, all our positions, and before I speak, let me just double check. Yeah, all our positions are positive, and we've had some that acted really well today. Here's another thing that I find very important. In my show, the Tiger Technicians Hour, which is on every market day, 11 o'clock till noon Eastern Time, the same calling number, 877-927-6648. I've had a number of people looking at certain stocks that have been absolute leaders, and they are starting to find a little bit of pressure, like a Visa, like a Priceline. So I'm going to do this. I'm going to, first of all, I want to question in the den if I look at the TLT, that's the bonds, the daily, weekly, monthly. Absolutely. Let me do this. I just want to go through so that if you're listening on the radio, but you're watching verbally, you can't see the charts. Think of a V-shaped pattern. Just a V goes down and up. The midpoint of that V I call the plumb line. When the price goes down in exactly the same number of bars and then comes up in the same number of bars and then surpasses the left side high on a closing basis, in other words, let's just say the high in the Dow was 15,709 on the 18th, but we have not closed. The highest close so far is the close of the 29th at 15,680. I want to see closes above. So I just want to get that out the way, because 3 closes out of 4 above that particular peak, and you really are looking at momentum building. But there's something else that some of you might not be used to. Look at this chart on the left here. This is the daily chart. And in this particular chart, what I'm looking at is that this is called the MACD, the Moving Average Convergence Divergence. It's just a big term. But it's just a series of 2 moving averages, one of which is the combination of the two. So already my eyes are glazing over. But the green one, to me, is absolutely imperative. That's the one to watch. That's the fast-moving average of the MACD. It is above the red line. That's very positive. And that says, even though I've got a peak D in the Dow, in the Chapman methodology, there is still, and I spoke about this in my show for a couple of days now, I've been saying, there is still internal strength. But the bottom one is called the stochastic, the slow stochastic. And that one, the red line, is holding at 86%, which is good. I love 80%, but the green line is moving down. So there's a bit of a divergence. So let's keep that in mind, and also let's look at that black line there, which is the 9-period exponential moving average. It's just a very short-term 9-period look back, in this case 9 days, uses the closing price to give it a certain body of strength. I like that. I love this particular moving average. This is saying that the price today held the 15,000, what was it, 15,000 being, I can't see, 15,536 low, and bounced off it. That is a positive. That's number one. But now let's look at the weekly chart. And the weekly chart says, wait a minute, we're making this series of cup formations. Now, cup formations are fine, except what I showed my subscribers the other day is that, look at this chart. I wonder if I can find it quickly here. Oops, I think I made a mistake. I shouldn't have gone there. Oh, boy. Okay. So I had it already. I said I'm all set with this one, and now I'm not all set with this one. I think that's it. There it is. Now look at this chart here. What? Do you recognize this chart? Well, this is the chart of the Dow, and I gave it as a quiz to my subscribers in my opening call. I said, look at this chart. Look at the price point, 1, 2, 3, 4, 5, 6, 7, 8. But look at this beautiful series of arches in red and the V-shape M pattern. What does that mean? It says that within this context, you've always seen resistance right at that point and then a reversal. That's number one. But you've also seen support at the bottoms here in the 15,000, 14,900 area. I'll be back. Basil Chapman sitting in for Tom O'Brien. We're going to go through these stocks and markets in great detail. Please call. I'd love to hear from you. I'll be right back after these very important messages.